Mark, welcome to Options Brew TV Market Shot. You're the man. You're the reason we're here. Harvested Financial, you're the expert. I'm just here to play your sidekick, essentially.
Oh, you're too generous, Lex. It's good to see you, but I think we got some good stuff to talk about here. Some interesting market structure stuff that I want to talk through for you and the audience.
Okay, good. So that's great. So I think our last Clubhouse event, we talked about UVIXI and VIX and some of that weird relationship. Are we going down that rabbit hole again, do you think?
Exactly. I think it was a really interesting settlement that came out. I guess it came out on Tuesday, maybe Monday afternoon or Tuesday. But this week, the Volmageddon saga has finally wound itself to a close.
Okay. What does that mean, by the way? Does that
So
mean
Volmageddon, I can't believe it. It's already May 2021. This was all the way back in February of 2018.
Wow.
So the beginning of February 2018, I think it was February 5th.
Mm-hmm.
We had a little bit of a crack in the market. The SPOOs sold off, VIX was spiking,
Yep.
and VIX was spiking pretty hard to the point that VIX was almost double, up almost double on the day.
Mm-hmm.
And so it created a little bit of a pickle for a lot of these vol ETNs that had been out there.
Okay.
So, this was that late 2017, there were just, all these different volatility ETNs. You had TVIX, you had SVXY, UVXY that looked different than they look today. You had all these different vol ETN products that were trying to replicate short VIX, long VIX, double long VIX, reverse double long VIX. You had this whole product complex that had evolved. But I don't think a lot of the people playing with them realized what could happen when the market really went sharply in one direction.
Right. And that's what we had with, was it the UVIXI that did it, or was it another product?
So TVIX definitely imploded.
Right.
And then the other product that was the result of this lawsuit against Credit Suisse was the, I'm drawing a blank on the name right now.
It's a UI VIX or UI, I forget what it was. But it was I thought it was UVIXI, but I guess it's not.
No, UVIXI is still around, and they actually changed this one. So after Volmageddon, they changed UVIXI so that instead of being a pure reverse, it's actually only a 0.5 reverse.
Okay. Well, the one that had the problem was it might have even been a triple or double reverse.
It was a double. No, right. I think it was only a single reverse. There was never a double reverse that ever listed on the
Got it.
But the single reverse, is single reverse. If the VIX doubles, that should theoretically be completely bankrupt.
Well, that's what we ran into, right?
And that's what we ran into.
Yeah. So what was this? The lawsuit came out. They actually ended up not suing Credit Suisse, right? They were exonerated, and it turned into Standard & Poor's, I believe, S&P.
Exactly. No, you're exactly right. And so XIV was the product that I was drawing a blank on.
That's it. You're right.
So XIV was the Credit Suisse ETN, and the original lawsuit was such that the shareholders of XIV were suing Credit Suisse because they believed that Credit Suisse was actually impacting the market price of their investment.
Mm-hmm.
Because Credit Suisse issues this note. And so it's not exactly an ETF, it's that ETN, that note is very intentional, that, it's structured slightly differently. Mm-hmm. But essentially with that note, your counterparty is Credit Suisse. Credit Suisse is the one that's going to deliver the, gains and losses of that ETN to the owners of it.
Right.
And so Credit Suisse had to actively kind of hedge their exposure.
Well, I was going to say that therein lies the issue a little bit. If Credit Suisse is delivering that as a note of sorts, and they're taking the other side of every trade, technically, there is a hedging problem that comes in that can exacerbate or accelerate the issue at hand, right? Is that what they were alleging in terms of that lawsuit?
100%. And as the issuer of the note, someone goes into the open marketplace and buys XIV shares, they can create and redeem. So they can create and issue more shares as there's more demand for it. And, that's in their interest, right? The more people own their note, the more fees they can charge, and they want to get this product as big as they possibly can. And so for every note that they issue, every marginal kind of share that gets bought, they're going out and representing an increasingly large part of the marketplace. And they're actively hedging this with the listed VIX futures. And I think in some cases, a lot of these are also backstopped by OTC type trades.
Mhm.
But in this case specifically, there's a pretty significant active VIX futures hedging component that they have to deal with. Value of the note goes up, the value of those ETN shares go up, and Credit Suisse is losing dollar for dollar. So they want to be buying VIX futures as VIX futures go up and selling VIX futures as VIX futures go down.
To hedge their exposure on the XIV.
Exactly.
Yeah, that's interesting. Huh. Oh,
And
yeah, they never,
so,
well, they never thought of, so that happens typically then when we have the extreme, these, I don't want to say binary, it wasn't really binary, but we have these events, it almost seems like it was a 2SD move kind of phenomenon, maybe even more. And when you get into that world, people, even the smart people on Wall Street, they say, wait a minute, I didn't think about that part, right? I mean, that's a scary situation. And we had that with USO oil futures, how they expired negatively. People just, all of a sudden, they don't think about what could possibly go wrong at zero. And I've always instructed students, I'm like, don't worry, it can't go below zero, right? Well, typically most things can, except an oil future when someone doesn't want delivery of it. Right.
And it all comes down to really like the plumbing of something that, on paper, yes, this, is going to go up or down dollar for dollar with the VIX as it goes up, and vice versa. And so, on paper, that seems like that works, but you get into these weird plumbing mechanics at the extreme, like you said, at the settlement of USO, or on the day that, Credit Suisse has to hedge their VIX futures position at the sort of infinite gamma point where the VIX cash is doubling on a given day.
Right. Well, there's no, I mean, I guess there's no real way around that. The exchanges figured this one out, right? They dead and buried it, I think.
Right. The commission no longer will approve a single 1x reverse VIX or anything greater. They've never approved anything greater before, but they knocked SVXY down to only a negative 0.5 relation.
So the commission said nothing greater than 1 time. So we can have fractions of 1.
Correct. And that's the only reverse vol ETN product, ETP on the marketplace right now.
Okay, good. What is VIX doing? Have you looked today? I didn't even pay attention to it.
We're down quite a bit. We're down a $1.57 right now. So we got a little pop in the market this morning, but VIX still trading over 20.
Yeah, that seems to be that mysterious number, the 20 handle. You and I have talked about this in the past before. What most, I don't know, maybe newer folks to the marketplace, right? We're starting to learn about VIX, and they have that 20 handle in their head, right? And you and I know that 20 was a high number to us. I mean, God, I remember when VIX was 8 and people bought it at 10 and lost money. I'm like, oh my gosh, right? So VIX, it can go a lot lower. I know we have some interesting economic climate on the horizon. When a lot of people are probably a little bit unsure of where that can lead relative to policy and how it will affect the market, I suppose. But man, I tell you what, in despite of that, and even in view of that, the market's resilient, isn't it? I mean, I know we've been down a few days, but we're at 34,000 in the Dow, and the Nasdaq's at 14,000 still.
Oh, we're really not that far off the all-time highs. And, this is actually a great teaser for my newsletter that's going to come out tomorrow, that I was doing some research into sort of some of these numbers about like the VIX and whatnot. And, we're seeing bumping down at that 20 floor, but the entire month of April, we didn't see a print above 20 in the VIX. The average was about 17. But a 17 VIX means that there's, an average expected move of, something like 1% a day, a little over 1% a day.
Mm-hmm.
Market wasn't moving that much.
Yep.
So, there's that like latent risk sort of priced in the background. Like you said, maybe it's related to the economic conditions. Maybe it's related to, volatility tends to cluster. It'll be very calm, and then all of a sudden, boom, another big couple days will happen all of a sudden. So it's interesting.
Yeah.
I think I see that we got a question from the audience.
Yeah, we do. let's see. Yes, please go ahead and ask your question. Go ahead and type it in that place. Is fine. We'll see it. That's great.
Fantastic.
Yeah. So, the other thing we talked about, I'll wait for the viewer to type that question in. Inflation, right? So we had a very interesting number come out. I think it was last week. It like people had to do a double take on it, right?
Mhm.
So I had an interesting situation in real life, right? I'm part of a finance committee, believe it or not. Yeah, right. So, and we had the opportunity to lock in a loan with a fixed rate that wouldn't ratchet after, when the construction loan fills in. I'm like, well, wait a minute. Why wouldn't we take that at these interest rates now with a little bit of uncertainty I'm being nice, a little bit. I think it's a lot of it. Inflationary problems cause higher interest rates potentially. Let's get our eggs in the basket now and hold on to them for 7 years. I mean, is that
Oh, yeah,
crazy?
no,
I don't think that's crazy, is it?
not at all. I think, interest rates don't have much lower to go.
Well, when you can see the floor from where the interest rates are, when they start paying me to borrow money, that's when you borrow $1 billion for 99 years, right?
For 99, yeah, exactly.
I'll do
Let me
very
know when you can find a counterparty where I can do that.
That's right. Okay, Mark. Well, that's great. So, for everyone, what we do is Mark and I, we get together at 11 on the market shot every day. Every Thursday, 11 at Central Time. And we always have a new spin on something. So today we're talking about volatility. We'll morph into some other things. Occasionally, we might even talk about our favorite wine. You never know with us. It goes all over the board because wine has futures and futures are tradable. So we might even go there. You never know.
That's actually a perfect conversation for right now. Some of those futures are coming out. So
That's correct. They are coming out, and they're pricier than ever. I hate to say, I can't afford wine futures anymore. It's so expensive. So yeah, if you have suggestions, email us at give it to tradehawk@tradeear.com. If you have some topics you'd like to hear, we'd love to hear it. That'd be fantastic. Otherwise, we pick some kind of pertinent topics in the industry. So we talk for about 15 minutes every Thursday. The bigger shows on Wednesdays, Option Brew. That's usually a special guest, sometimes Mark. And we go into depth about trading strategies and some of the things we're seeing in the marketplace. Does that all sound good, Mark?
Yeah, that's great. No, like you said, we love talking about market structure. We talk about some trade setups, anything that's interesting going on in the business, what's making the market move and tick, and kind of give that professional, both former market maker experience and perspective on the.
Yeah, and if you see my jacket behind me, that's not a prop. That's a legit jacket, right? I remember the old days. I was so happy to wear that every day down on the trading floor with my cards. I didn't even have a computer or calculator, I don't think, back when I did this on the floor. So, one thing is true though, the mathematics hasn't changed. That's the good news, right? Computers have changed the world relative to our business, but man, the math's still pretty similar.
At the end of the day, it's relatively simple arithmetic and risk reward that it comes down to. The model's complicated, but the math is simple, I think.
Right. Good deal. All right, Mark. Thanks. Good to see you. I'll see you next Thursday, 11 o'clock Central AM. Have a great weekend. Enjoy some of that good wine.
Yeah, sounds great, Lex. You too.
All right. Talk soon. Goodbye, everybody.
Bye.